Hey, it's Phil Ratcliff. Thanks for joining us our live broadcast. For our live broadcast, we actually had to change it up a little bit to incorporate something that's really important. Something that's we almost missed it. It is Life Insurance Awareness Month, and so we were going to touch on life insurance, who needs it, when, why, as well as expanding just to really touch on disability, long-term care, health insurance, and Medicare. So this is our insurance-packed thing. So it takes both of us. Me and Tony are both going to split this up and try to break it down for you guys. But just to kind of kick it off, we are going to start with a video from the lifehappens.org. It's a nonprofit organization that does a lot of the insurance stuff. And this year's Life Insurance Awareness Month sponsor is Danica Patrick. So let's just go ahead and roll that video, and you guys can watch it and see that good message from her.
Hi, I'm Danica Patrick. Driving race cars for a living means going 200 miles an hour around a track with concrete walls. I know the risk, which is why I've had life insurance since the start of my career. But that's not the only reason I own it. As teenagers, both my parents lost their fathers. Neither had life insurance. My mom was one of 5 kids and remembers her mom having to sell off most of the family farm as a result. My parents made sure they had coverage to take care of my sister and me in case something happened to them. But so many people are taking an unnecessary risk by not protecting their families with that financial safety net. It means your loved ones would suffer financially if something happened to you. It's time to protect your family's financial future. Get life insurance. It's affordable, it's doable, and it's the right thing to do for your family. For help, go to lifehappens.org. Get it done.
A public service message from the nonprofit Life Happens.
We're right. So I hope you guys enjoyed that. Pretty short and sweet. It's pretty short and sweet. But wanted to give us something that's just a little bit different than us. Somebody that's better looking than us. Somebody that's better looking than us. To give you their story about life insurance. Any of these insurance, are not necessarily fun subjects. But the reason that we do that is to make sure that we are taking care of the people that we care about and our responsibilities, and that life goes on if the worst was going to happen to you. So we're going to share a screen a little bit with you, and if you are watching this on Facebook or on YouTube or LinkedIn or wherever, we're going to try to post a few extra resources that you can use to figure out, how much life insurance do you need, or some myths or some facts about it as well too. So as I mentioned, this lifehappens.org, so you can just type that in, lifehappens.org. It's got some very good up-to-date stuff. There is a life insurance needs calculator. I think we're going to post on all of ours, our calculator right here. It's probably a little bit more sophisticated in terms of, what's my real need. Of course, if you have a financial advisor, or if we're your financial advisor, reach out to us. We'll help make sure you got the right amount of life insurance to protect your family. And so life insurance, you really need it if people depend on you. I think that is the acid test. If you are the breadwinner, or even if you're not and you're a stay-at-home parent, and it would cost a ton more for childcare if something were to happen to you, and you're not sure if what you have is adequate, or you don't know what you even have through work, and you don't have a personal policy, then that's a super red flag that you should do some type of analysis with a financial advisor or with an insurance professional to check that out. And I'm going to mention them a couple times, but one of our partners is Dolly Insurance. Dan Brookman is one of our main partners that helps us with a lot of these insurance needs, and he's got a couple other partners that help with the health insurance and the Medicare supplement stuff. So we'll kind of come back to that, but someone that just specializes in insurance, that doesn't necessarily work for any individual insurance company, those can be great resources because they can shop for you. So again, use our life insurance calculator. If you're unsure, reach out to us. reach out to your individual financial advisor, or we'll also post Dan Brookman's information as well if you'd like to reach out to him.
Well, and peeling back a step, we do not sell any of these insurances.
No.
So a lot of agents do, a lot of financial advisors. So we want to make sure that, most agents that you work with Stolly are going to be good and straightforward with you, but they're not all. So we often have people coming to us after a couple of decades of overpaying substantially for different insurances. So as we go through this, keep that in mind. We do not make money from insurance. We just want people to insure themselves in the most efficient way instead of wasting money over decades of time.
So you don't want to spend too much money on insurance. But on the flip side, if you are successful and you've got a decent to good life, you kind of want to lock in where you are so that if something bad happens, that you could still go on and have the life that you want to, or those that you care about can. And so having the right amount of life insurance or disability insurance or long-term care insurance, making sure that you're covering that health insurance, and that's definitely getting harder these days. So let's skip down to the next step, which is going to be disability insurance, Tony.
So disability, just like it sounds, right? I mean, this is again about protecting your asset. As Phil talked about life insurance, you're protecting yourself as an income producer, and that's the same thing with disability. But sometimes a disability can be even more of a financial strain, because not only do you have you lost that income, but you now may have increased the costs that it takes to take care of yourself. So when you're needing your income or spouse's income, that's when you need to get disability. And it's just as it sounds. You can usually get it through work, and normally it will cover about 60% of what your income is. But if you need more than that, you can do other things to supplement that as well. But it's basically going to supplement your income. And the stat that I always see is 3 out of 10 people will be out of work at some point in their career for over 90 days. So if you don't think that's something you can sustain, or if a catastrophe happens and you're unable to work and properly function, you're going to need some sort of income. And if you're making a good income, going down to just Social Security disability, that's going to be a steep drop off in what you're making. So
absolutely, and a lot of people think that, if I get hurt, then Social Security or workers' comp will take care of it. Workers' comp is only going to pay you if you get hurt on the job, and it's less than what most people think. And then I don't know if you saw some of these infographics I was flipping through, and we'll post some of them so you can look at them later. But the average disability payment from like SSDI, which is Social Security disability, it's only a little over $1,100 a month. That begs the question: could you live on that?
Right.
I don't think most people could, unless you're living in a box, or you're lucky enough to be disabled to where your house is paid off or something, and then you'd still be scraping. And that's not most people. So disability, if you're still working and you can't retire right now, insurance is very important. That is kind of your acid test. If you are dependent on your income and other people are, and you cannot retire and live off of the savings and assets that you have, then you need to make sure that you have enough disability insurance. And we have really successful, smart people that are even doing planning with us, and we're like, well, what's your disability through work? I have no idea. Like, how does it work? You get 50, you get 60. Are you able to purchase more? Is it going to be taxable? Is it going to be tax-free? These are all like super important questions. I mean, knock on wood, hopefully it never happens. But like Tony said, I think a 20-year-old, there's a 25% chance that they'll be disabled at some point before 67 when they retire. That's a big number. And so, hopefully that doesn't impact you. But if it did, you're not even dead and gone. You're still here. Right. So not only does your family or but you need stuff, Yeah. So that is an important thing. And a lot of people skip disability insurance, and they really should. I would say for people that are actually pretty successful, 50 to 60, when we do an actual financial plan for them, I would say the biggest weakness of most of their plans is inadequate disability insurance. Right. And that could really derail them. Yeah. So let's skip on down to the long-term care.
Yeah. Yep. So long-term care, so moving down, we talked about 50s and 60s. As you can see there, 70% of people 65 plus will need long-term care. I just went through this myself because my father-in-law passed away about 3 weeks ago now, and he had been using long-term care for the last 3 years of his life. And had he not had that insurance, it would have been $5,000 or $6,000 out of his pockets every month. But not everybody needs long-term care insurance. It's those that don't have a lot of assets. You're probably going to go through your assets anyway, so you might not want to spend that much money. Then when you have enough to insure yourself, you may not want, feel the need for it as well. We run, when we do our plans, both scenarios. If you do have a long-term care incident and what that looks like with or without long-term care insurance. So it's important, but basically it's for when you're retired. There's a good chance that you're going to be needing some type of care at some point, you or your spouse especially. There's a high percent if you're married, and so you want to protect against that. So you can protect those assets, and they can last for all of both of your lives.
Yeah, and so you saw that statistically we just threw up on the screen. So 70%. I mean, that's a big number. And then you could see what the average is for women. It's about 3.7 years, whether it's home health care, assisted living, full-blown nursing home, and a little over 2 years for men. And so what we find, even though long-term care insurance is pretty expensive these days, is that the break-even period somewhere around 2 years. So the average person will probably break even on a long-term care policy. And like Tony had mentioned, if your net worth is below a couple $300,000, then it may be prohibitively expensive, the amount of premiums that you would have to pay between whenever you bought it to, 70 to 90, depending on where you hit that gap. But if you're above that, but below, $1 million to $2 million in net worth, then that's really the sweet spot to where the insurance could really help. You get above that, then you could still buy the insurance. There are a lot of different reasons than just monetarily, in terms of preserving family relationships and protecting your loved ones' careers, just building it into your plan so that there's something there that's dedicated to taking care of that. But those people generally can, if they take care of their planning correctly, self-insure, a lot of times even a catastrophic long-term care. But again, I wouldn't just depend on that unless you do some kind of financial plan with someone like us to model that out and understand the risk that you're taking and that it is acceptable, that you're willing to do that.
One last point, if you yourself don't take care of your long-term care needs and you haven't planned it out, that burden is going to fall on somebody else, a family member. And that's more times than not what ends up happening. I mean, my wife literally, before we were able to move into assisted living, was a full-time nurse in addition to all the other responsibilities she had. It is a lot of responsibility for family members as well, and this helps alleviate that if you do things properly.
Mm-hmm. So this one of the Life Happens resources that they have is they do have like case studies and where you can see like how different things help different people. And this is a story about a family to where this woman's husband had a stroke and then used care for well over 4 years, and just over that time period, that's $400,000 in costs. And they said, we would have liquidated everything had it not been for this, basically. So again, it is expensive. You need to talk to an insurance agent to quote you to make sure that they shop for you. There's multiple different types of long-term care insurance, from pure long-term care, which is generally the best if you're trying to insure long-term care, to hybrid type policies that try to mix your life insurance or annuity with long-term care benefits and kind of leverage those dollars. And there are a lot of pluses and minuses. If you really want to get into the more complex planning of the retirement with the tax, with the insurance, then you really need to hire a CFP, certified financial planner, that specializes in actually building complete financial plans to model it all out for you, on top of just deciding that you want to buy a policy. So you can check out some of these case studies, because I find people that do buy long-term care more, they've had personal experiences of somebody in their family and they saw what happened dynamically. And so a lot of other people may not have had that experience. And so you're kind of making a decision that's just analytical without seeing the people side of it. So reading some of these case study stories is actually probably a good thing to balance out, because again, a lot of times you don't buy your insurance for you buy insurance for the people that you care about to fulfill, an experience or how you want your life to play out when things go a different way. Okay, so that's long-term care. You have questions, we're going to comment some things and some resources. Again, I think Damani's posting some of our, calculators for the disability insurance, for the long-term care. Test those out. There are other ones out there that you can use that may not be as complete as ours. So if you don't want something that's as complicated as our calculators, but they do tend to be a little bit better. But again, they're calculators. They're not a plan. Okay, if you want to understand how all of these different things impact each other in terms of your insurances, your investments, your pensions, your Social Security, your taxes, that's a lot more complex than any calculator can do. You need to engage a financial planner. So let's move on. We're going to hit into health insurance. Health insurance is a super hot button these days, right? Just politically, but just from our standpoint of being practical, like how can we design and live and save and protect ourselves and our families? So really, I think we're going to open up into more options, and there's a lot of people, discussing whether this is going to be a good or bad thing, or if we're eventually going to hit universal health care, let's so. But right now, we're just going to focus on what's going on right now. Most people are going to get their health insurance to do their work through a group policy. You're going to have open enrollment. I would say most of us are pretty familiar with this. If you're not, most of those programs through jobs have a pretty good program, and Aetna or Medical Mutual or whoever is the provider does a pretty good job of having enrollment and walking you through and asking you questions to pick the policy that'll be best for you. So we are going to kind of skip over that because I think that is more well known and people understand that. But if you do end up not covered or in between jobs or get laid off, we run into this a lot or more often now, since there is a lot more change and companies just tend to be changing things all the time, or laying people off and then rehiring later, and then you end up without coverage.
Our
right?
government's changing things regularly too, so
right.
There's a lot of moving parts.
So if you have a job and you lost it, then generally you have the option to pick up COBRA. And what COBRA is, the ability to stay on the group coverage of the company that you had before for a specific period of time for the same price. However, now you have to pay the employer's premium on top of your premium. So it can be expensive depending on what type of insurance and what type of deal that your company had before. But if you need that guaranteed coverage, especially before we had the ACA, the Affordable Care Act, other people know it as Obamacare, but now you have guaranteed coverage from that. So you shouldn't just automatically do COBRA unless you're in the middle of some medical stuff, especially if you've already maxed out the out-of-pocket. Even if it is a little bit more expensive, you really got to think about how much you're going to spend. But there are lots of options now, and if you get laid off or whatever the case, then that does open a special enrollment period to where you can shop, see how much it would be through the exchange to see if you could get a subsidy. Again, sometimes it pays to hire an insurance agent to shop these things for you, because you can look on the private and you can look on the healthcare exchange. Especially if your income's a little bit higher, you're not going to qualify for any subsidies. If it is a little bit lower, so under the 4 times the poverty limit, then the government's going to chip in through tax credit and help you pay it. We're going to see what's going to happen in the future. So one of the things that's going to happen after this year rolls over is the current administration has knocked off the mandate that you buy an exchange policy or a policy that meets certain criteria, or there's a tax penalty. So the tax penalty is going to go away. So we could see more people opting out. We could see more policies that don't necessarily comply with the previous legislation, meaning like maybe they're less comprehensive policies that are more affordable, that if you tried to buy that before, you would have to pay a tax penalty. That's going to go away. So there may be more options from policies that aren't as comprehensive or different, especially from religious organizations and so that don't like some of the things that have to be built in to the ACA policies or so. They could save people money, especially now that there's not going to be a tax penalty for buying one of those policies. So there is going to be more choice next year. This is some of the debate, without the mandate, it could raise prices a lot on some of the individual healthcare plans. So it will be interesting to see how that practically plays out next year. And this really hits into what we're going to hit into next. We have a lot of clients that are retiring pre-65. And what's important about 65? It's when you're Medicare eligible. So our own socialized healthcare in the United States that almost every person, no matter what their political beliefs are, pretty much likes unless they hit the donut hole, which Tony's going to explain a little bit. So let's hit into Medicare.
So Part A is the first part, right? If you've been participating in Social Security, when you hit 65, you will automatically be enrolled in Part A, and that's for hospitalization. And we're going to be somewhat quick here because we could talk about this for days. But the hospitalization is free, assuming you've been paying into Social Security. If you haven't, there might be a charge for you, but you will be automatically enrolled. If you're not automatically enrolled and not paying into Social Security, then you yourself will have to take steps, and you've got a window to apply for that. But that's going to cover your hospitalization, okay, to degrees, okay? And we'll go into that with some supplemental insurance as well. Part B is going to be for your doctors and those sorts of things. And again, it doesn't provide everything, but you yourself have to sign up for Part B because there is a cost to you. Right now, I think $134 a month is what it is for 2018, and they'll normally just take that out of Social Security if you've paid into that.
But if you're receiving, otherwise I think you have to pay quarterly. They'll send you a bill.
In that way, yeah. they want to make sure they get it the best they can, so that's how they do that. So, but that's going to take care of your doctor visits, and as opposed to A, which is your hospitalization. So, again, giving an abridged version here as we go through this. So, Part C is going to be the supplemental. So there's a way of configuring these because C is kind of A and B if you want, and a little additional to that.
There's a C, you're really kind of opting out of A and B, and the money that they would have sent to them goes to the insurance company. It's also known as Medicare Advantage. That's probably the main thing that most people know. And so it's kind of like when you are with your group policies or what so, and you have an HMO or PPO through work, and you had to use in-network and out-of-network. So if you're happy with Aetna's plan or Medical Mutual or United Healthcare's plan, and your doctors are in-network and they cover the drugs that you need, sometimes it's less expensive. But you really got to shop if you're going to do a Medicare Advantage plan to make sure. And then if you stay in it past a year, it's not guaranteed insurability to come back to the traditional. So again, you really got to be aware of what you're doing, shop it, and make sure that it's good for you. So I'd say, the majority of people take the traditional Medicare A and B, and then they get a Medigap policy. So Medigap policies, I think, is the next step that we want to talk about. So you want to go over that a little bit, Tony?
Sure. So are you looking for the chart here?
Yeah.
Yeah. So you can see, without getting too specific, you can see on the left all the different parts that may be included in the plans that you see going across the top, right? So for instance, all of them include Medicare Part A, coinsurance, and hospital costs. It goes on and on. But then as you go down from there, you're really looking for a plan that probably matches your needs the most. And at the bottom, as we scroll down, the last thing it will tell you is, the different out-of-pocket limits and things like that. So you have to weigh the differences of all these different needs and how they apply to you and or your spouse to make a determination on which one you think is going to be right for you. And, from there, you get to decide that on an annual basis. And so you just want to weigh it and say, which one of these am I going to do?
It's going to cost you like $50 to maybe $170 a month, depending on which one that you pick. Although that little alphabet soup, the A, B, C, D, F, G, K, L, M, N, those different plans are actually legislated minimum benefits, kind of like the ACA was, except a long time before that. So the insurance companies have minimum things that they have to include in there. Most of them don't do a ton above that. So there's really not a lot of difference between the different insurance companies and the ones that you choose, besides price and service. Okay. So again, you can get an agent to help you with these. It doesn't cost any more, whether you go out and go online and buy yourself, or whether you go through an agent, or whether you pick AARP's endorsed one. I think they probably just get a kickback that the insurance agent would have gotten when you go through AARP to use the provider that they endorse for that specific year. So a lot of times it is good to get an agent. Again, we worked a lot with Stolly, another one. So their information, we posted it before. Another one that a couple of our clients use is this company called Allsup, and like you can pay a flat fee. So if you don't want to get advice from somebody that is going to make, you know, kind of a commission from selling you that product, you can pay a flat fee to a company like this to actually get all your medical information and drugs, look it up, and give you a recommendation on what to buy. So
no matter who you choose, it's not going to cost you more,
sure.
and
Sure.
yet you'll be directed in better advice. So you should probably look to them. So,
So again, another resource there for you. A couple of the web pages I've been showing you, this Medicare.gov. I mean, this is a government website, so a little bit more trustworthy. They're not trying to necessarily sell you anything, besides to maintain their jobs, right? So you can come here and look up anything that you want about, you know, Medicare A or B or the supplement. So for most of our clients end up, you know, after the research and looking at, they go with the traditional A and B, and then they get one of the stronger supplement policies. When you do that, I rarely see anybody spend more than a couple $100 out of pocket in a whole year, even with medical problems going on. And you know, for that, you're gonna obviously have paid a lot into the system. You gotta have 10 years in to be eligible for the free Medicare A. Of course, if your income's really up there, depending on if you're single to married, 200,000 to 400,000, you know, once you pop above that, there are extra premiums above what we talked about for Medicare A and B. It's kind of one of those social net things to help people of lower income have fixed costs on the healthcare. But if you make a lot, then you can pay a little bit more for your health insurance as it stands now. But most of our clients pay something, you know, say $3,600 a year in premium between the Part B and the Medigap policy with very little out of pocket. So considering that once we pass age 65 till we die, that is the most expensive part of your life, and it's about the most inexpensive insurance out there on the market now. I think it's pretty hard to argue that Medicare isn't a great program for our country, and helps a lot of our more senior citizens take care of their health later in life that they've earned. And it'd be nice if we had that for everyone and it wasn't so complicated with all of the health insurance.
well, and the best part about it is the predictability-ness. I mean, that's if you've retired and you're before 65, it's just, you know, with the changes,
That's tough. We got a
everything
shop
else,
and we don't know.
you don't know. But once you hit 65, it becomes a lot more predictable.
Yeah, some plans where we got to put both spouses on an individual policy, say from 60 to 65. I mean, we could be upwards of $15,000 to $20,000 a year in just insurance premium before they hit 65 and Medicare kicks in. So again, if you're retiring pre-65, you need to do a good bit of work. Probably talk to a financial planner. Model it all out for you, because it is going to be a significant extra expense, and then planning in the transition into Medicare, to which it's going to save you a good bit, and hopefully you can glide on from there. But I think that's about what we got for today. I would like to hit into some property and casualty insurance too, but obviously you're probably tired of listening to us talk about insurance for 27 minutes already. So hope you enjoyed this. It's a little bit different. Insurance is very important. Having a good team of professionals that work for you, you know, from a tax professional to a financial planner to an insurance agent, can really put it all together to make sure that you're going to have the most of your assets possible to have a good life, while also protecting from the things that could jerk you back down over time. So again, thanks so much for joining us. Hope you guys have a super finish of the week, and good weekend. We'll see you next week.
And enjoy the rest of National Insurance Month. Only 10 more days, so
yes.
make the most of it.